The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you here as we look to finish out the week. And we're going to start with a piece from the New York Times. It's titled, "War and Tariffs Threaten a Resilient U.S. Economy Again." Let's unpack this a bit in terms of these two items, because they're two different items. Obviously, that's why they're mentioned as separate items in the headline. Let's start first with the tariff piece. What happened yesterday as it relates to tariffs, Mike?
We had an announcement from the White House that they were imposing tariffs per Section 301 of the Trade Act of 1974 on around 80 different countries between 10 and 12.5% rates of tariff. Those tariff rates are not caps predetermined by that section that they are using. The White House chose those rates, and so these tariffs replace a bunch of expiring tariffs and continue and try and keep in place an average tariff rate of around 10% on those countries. I don't know how big of a change this is.
I do.
Okay, good.
It's not a change.
It's not a change. And the important piece that I wanted to point out there is this law would have, the president and his advisors could have chosen a 20% rate. They could have chosen a 50% rate. They could have chosen a 100% rate if they so chose. This seems like a status quo move that they are hoping they can put in place without much disruption. And while I am certain there will be lawsuits on behalf of all sorts of companies that file suit, asking about the supply chain research that the White House did to determine whether or not they are using slavery and indentured servitude in the supply chains, it seems like kind of a non-issue.
Yeah, I mean, I think the piece that's interesting to me, you're obviously going to have legal challenges to
Of
this.
course.
I think the piece that's going to be interesting to me on the legal challenge, because, again, like the previous ones took, what was it, like almost a year to work through?
Announced in April, and
I think we got the resolution in like December or January.
Yeah, it was sometime. Yeah,
between December and February. So it was like 8 months or so. Let's call it 8 to 10 months was the process. During that time, the tariffs were still allowed to be collected because the U.S. government alleged, okay, there would be irreparable harm or whatever it might be, and so we're going to be able to still collect them
and then refund them all.
Correct. And so that's the interesting piece to me is, given that first round of tariffs, when finally struck down by the Supreme, was it the Supreme Court that struck it down? Or, okay, I can't even remember like the full path it took.
Yeah, they didn't resolve how it was going to be paid back, but they ultimately struck it down.
Got it. Now that precedent is set, I wonder if any legal challenge that ends up pausing tariffs, that to this, ends up basically like staying the tariffs, and so they're not in place until the challenge is resolved, given that there's a precedent set for refunding tariffs that were found to be, unconstitutional.
Fair question. Yeah,
that's the only interest that I have on this. Is this round of tariffs going to change anything for the U.S. economy? Broadly speaking, no.
Right.
On an individual level, depending on the company where you import, maybe. I'm not saying it won't have any impact on anyone. What I am saying is it anything that rises to the level of this is going to, affect the U.S. economy and threaten it as, is being said in the title? No. Now, if you want something that is, that does have the potential to threaten the U.S. economy, the continuation and potential expansion of a war in the Middle East, yeah, it's got it. Okay? To this point, high energy prices have not caused a meaningful downshift in the U.S. economy. That doesn't mean that if high energy prices either continue or get worse, that they won't. And that, I think, is the important thing to note when we talk about this, is to this point, the stuff that's been driving the U.S. economy has been semiconductors. And look, high energy costs don't really threaten the semiconductor trade. There's other stuff that's threatening that, but it's not like what's happening with gas prices or diesel prices or heating oil prices doesn't impact how many memory chips Micron sells or how many GPUs NVIDIA sells.
To put it plainly, this is not a consumer-led economy like it was for most of the last 2 decades.
Consumer spending has been fine. It hasn't been bad. It's consistently growing around 4 to 6% year over year with 3% inflation, which means it's growing like 2% in real terms, which is fine. Like it's not bad. It's not amazing. It's fine. Could that be threatened if gas prices move higher and it passes through to other parts of the economy? Yeah, potentially. You can make that case there. And if prices go high enough and there's enough demand destruction, it could absolutely cause issues that are more broad. But I'm also going to look at the data that we've seen, and to be completely honest, the real threat in my mind is not to the U.S. economy, but it's to the U.S. stock market. And remember, they're different.
Yeah.
They're fundamentally different. And the risk, in my opinion, is what happens to the bond market and its impact on the stock market. That's the real risk, in my opinion, is if we do end up with the worst case scenarios, which I don't know if they're going to come to pass. Like I'm not sitting here saying like they will. But if you do end up with the worst case scenarios about what could happen in the Middle East, which, again, we're kind of flirting with them. We're getting closer to them, but they're not happening now. If you do end up with those, what happens to bonds? How high do they need to go? And how much pain does that cause in the stock market? And then, because we do have this closer link now between asset prices and what goes on in the U.S. economy, does that derail consumer spending to the point where you start to see some problems?
Sure. I mean, these companies are investing hundreds of billions of dollars, and if they need to borrow money at higher rates, or if investors need to take a more critical look at that spending because those interest rates are that much higher, then that could be a piece here. I'll also, if we're talking about worst case scenarios, I don't think it's fair to ignore the fact that we could be facing actual shortages of energy, right? I know we've talked about that over the last several months.
I don't think we will in the U.S.
No. I don't think we will in the U.S. either. But let's remember that the AI supply chain is a global one, and a lot of this manufacturing and output does come from Asian nations that do not largely produce energy. And so I don't think we're going to get there either based on what China has been capable of doing over the course of the last several months. But this entire economy is not just a U.S.-centric one where the only thing that matters is diesel and gasoline availability here in the United States.
We've always been big on this show in terms of, like, you got to keep an open mind on potential outcomes. Last year in April, when we were, seeing different kinds of, trade situations, we said, look, you got to keep an open mind as to how this can resolve and understand that things can change quickly, and they did.
Mm-hmm. Like in a week.
Likewise, with what's going on in the Middle East right now, I think you've got to keep an open mind as well. And an open mind doesn't mean like just in one direction. It means, hey, the status quo could be maintained, there could be improvement, and there could be worsening. And yes, you can, weight those different probabilities. And if you want to peg me down on like my personal weighting right now, it's tough. Okay, Mike. Here we go. This is going to be a tough one to walk through. I have how I feel things will be in the Middle East a week from now, a month from now, and 3 months from now.
Good luck.
Okay, a week from now, I lean modestly towards things will be better. The reason being, when we typically see large threats coming via tweet or True Social from the president, that's usually about when things start to pivot in the other direction. That's been the trend over the last 6 months.
Which, just to put out there, is kind of interesting that oil prices are falling between 2.5% and 3.25% right now.
I think that's a different item, and we can get to that in a minute, though. If you look out a month from now, I think things are probably about the same. If you look out 3 months from now, I have no idea. And I'm not ashamed to admit that because I have no clue. But that's kind of where I think things are. On oil prices today, the big thing, remember yesterday, we have to now be concerned about two straits, not just one. We've got the Strait of Hormuz, which is connecting the Gulf of the Persian Gulf into the Indian Ocean. That goes around the top of the Arabian Peninsula. Coming through the bottom, kind of the southwest corner of the Arabian Peninsula, is the Bab el-Mandeb Strait, which the Houthis a couple days ago said, okay, we're going to restrict anything Saudi in nature, and took out 2 tankers. And then overnight, you saw traffic basically moving as normal. So the question, and why you have oil coming off a couple dollars, no one really knows what the Houthis mean by Saudi-related transits. It could be just Saudi-owned vessels, which the first 2 that were shot were. It could be anyone transporting Saudi oil, but that doesn't seem to hold up given what's transited through recently. It could be anyone making a stop in Saudi Arabia. So we still don't quite know the rules of the road there, and we'll see how that develops in the next week or two. But the initial fear after those 2 tankers were hit was, oh, they're not going to let anything through, and it's going to be the same as the Strait of Hormuz. It doesn't appear to be the case as of this morning, and we'll just have to see how it evolves. This can all change tomorrow. It's
change
during the show.
It's I mean, please, I don't want.
Which it has.
I know.
We'll keep you posted.
You know what I always, people wish for different things. I just want to live in. I want to live in precedented times, not unprecedented ones.
Yeah, precedented.
I want to live in times with precedent. That would be nice. Let's take a quick break. When we return, let's talk about a little bit this Fed meeting that's coming up next Wednesday. We're 5 days out from Kevin Warsh's second Fed meeting. Is it going to be a sophomore slump, or is he going to? Well, I don't really know if we'll talk about that next.
Kevin! From markets to money to business and financial news, watch the Financial Exchange every day on YouTube. Hit that subscribe button and keep up to date on the market news you need to know. This is the Financial Exchange. Protecting your assets doesn't always mean giving up control. Get Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts. Learn how to protect your assets while maintaining planning flexibility. Get your free guide today by calling 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. For veterans, every day is a commitment to service. This Veterans Day weekend, be part of something meaningful at the DAV 5K Boston. Join the thousands of runners and walkers at Fort Independence on Castle Island for a day of community, remembrance, and gratitude. Proceeds help fund the programs and services provided by the Disabled American Veterans Department of Massachusetts. To register or make a donation, please visit dav5k.boston. That's dav5k.boston.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Daily financial content in your feed when you want it. Follow the Financial Exchange on Instagram. This is the Financial Exchange.
If you missed any of our shows from this week, you can go back and find them on our YouTube page. We stream the show live every day, but also archive every hour and offer show highlights. All you have to do is go to YouTube, search for the Financial Exchange, and hit that subscribe button.
We got a piece here in Bloomberg. It's titled, Economists Stick to Fed Rate Cut Call as Markets Price in Hikes. So here's what we're seeing. If you take a look at the Chicago Mercantile Exchange's FedWatch tool, the FedWatch tool is saying, hey, we're going to likely see a hike at the September meeting, not July next week, and maybe another one at the December meeting. Economists surveyed by Bloomberg have said we're not going to see anything until Q3 of 2027 when the Fed is going to cut. So,
I'm just going to throw this out there. Is a forecast on something that's not going to occur until third quarter of 2027 right now when it comes to interest rates and inflation useful?
It's useful.
Yeah.
Like it's a data point as to what people think
Sure.
and what people think matters to markets. Here's the point that I'll make. Ultimately, when it comes to interest rates over the last 5 years, generally everyone's been wrong. You know, like it's not like what the CME market is pricing in has been accurate. You can see back in 2022, it was pricing in like 75 basis points of hikes for the full year, and we got like 450.
Yeah.
So I think that you have to look at all of this and say, hey, this is what's being priced in now, and then understand how different actions potentially change what that means for the market. So just as an example, here's something that you need to understand about the meeting next week. Right now, there is a 64.2% chance priced in that there is no hike. There's a 35.8% chance of a hike priced in.
Pretty good odds.
We haven't seen like a meeting be this, up in the air in a while.
Yeah.
It's again, it's a new Fed. They're not saying as much. We'll see if this becomes the norm or just, we got to get used to what they're saying or not saying. Here's the thing. If the Fed's not going to cut at the next meeting. I'm sorry to everyone who's hoping for that. And it wouldn't do what you think it would anyways. If the Fed does nothing at this meeting, what it means is that 35.8% chance of a hike that's priced in now hasn't occurred. It is implicitly the Fed creating easier monetary policy because the market right now is priced for the chance that they actually hike. Likewise, if the Fed hikes at that meeting, it is tighter policy than is currently priced in because there's a 64% chance that they do nothing. So it's not like one of these meetings where, hey, it's 99% chance that they're going to do this, and then when they do that, it doesn't affect markets. If the Fed doesn't hike next week, it is going to produce a loosening effect on markets, which the interesting counterintuitive thing is, if they don't hike next week, watch the long end of the yield curve, because I think it goes higher. If the Fed doesn't hike next week, it's saying, yeah, we're going to be easier than the market is pricing in right now. The long end's got to reflect that.
Yeah, it'll be so the way these meetings work, they put out their rate announcement at 2 p.m. and then the press conference occurs at 2:30.
Yeah.
It'll be interesting to actually watch the volatility in that half-hour period, or I guess that hour period from, interest rate announcement to real meat on the bones of the press conference. If they don't hike, I do think Kevin Warsh has to talk a lot more. Like, if his goal is to really shut up, then I feel like his best bet is to just raise rates and be able to not talk. If he doesn't, then he's going to have to face a lot of questions about why not.
I wouldn't be surprised if they hike.
Yeah.
Because if they hike, it does a couple. Here's the thing. A single hike is both incredibly meaningful and incredibly not.
Well, it's incredibly meaningful and not incredibly impactful is how I describe it.
That's the right way to put it. It's, if they hike next week, it's a signal to the market. Yo, dudes, new boss in town. My name's Kev. This is how I manage monetary policy. Like, it is very much like I am going to back up my talk with action. Even though it's one hike, it's not impactful in that it's not going to actually change the course of inflation. It's not going to actually, in and of itself, change where, interest rates are. But the signal alone might be powerful enough that it says, hey, this guy's, not messing around on this. And that could actually bring the long end of the yield curve in because markets say, you know what? He's not just going to let the economy run hot and, inflation be whatever he wants. He's going to slow the economy if he needs to in order to rein in inflation, and that's what brings the long end in then if it happens. So I think this is, in my opinion, this is one of the most interesting Fed meetings that we're heading into in a while. Because there is this uncertainty, and because of what the resolution of the uncertainty can mean to markets in either direction, depending on how it resolves. So, sometimes I poo-poo a Fed meeting. I'm like, this one's not really that. This is kind of a cool one here. And I'm pretty excited for it just 5 days out. It's like we're heading to Christmas, but it's Christmas in July. Quick break here. Wall Street Watch is next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Protecting your assets doesn't always mean giving up control. Get Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts. Learn how to protect your assets while maintaining planning flexibility. Get your free guide today by calling 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. For veterans, every day is a commitment to service. This Veterans Day weekend, Be part of something meaningful at the DAV 5K Boston. Join the thousands of runners and walkers at Fort Independence on Castle Island for a day of community, remembrance, and gratitude. Proceeds help fund the programs and services provided by the Disabled American Veterans Department of Massachusetts. To register or make a donation, please visit dav5k.boston. That's dav5k.boston.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about how Medicaid irrevocable trusts operate. Todd, many people are afraid that if they transfer money to an irrevocable trust, they will be giving up control of their assets and will have to ask their trustee for permission to spend their own money. Now, is this a valid concern?
No, it's really not. And folks, when you think about irrevocable trust, please remember that there are many different kinds of irrevocable trust. There are some that require a loss of control, rigidity, inflexibility. However, the trust we're talking about when you're protecting assets from a nursing home allow the donor to remove and replace the trustee, allow the donor to have really an unbelievable amount of control over the assets that are in the trust. They can live in their house, they can manage and invest their own money, they can sell a house, they can buy a new house. When the money's invested, they can have the income come directly to them. Folks, the control you keep over your assets in an irrevocable trust is really something you must try to learn about. And that's why we're giving you away a guide today to help you understand these trusts.
Request this brand new guide from the folks at Cushing & Dolan at 866-848-5699. It's called Unlocking the Power of Medicaid Irrevocable Trusts. Cushing & Dolan have been helping families like yours for more than 30 years, and find out if they can help yours too. 866-848-5699, or you can request it from legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Markets closing out the volatile week in mixed territory as Wall Street awaits more developments out of the Middle East, with oil seeing some relief today. Treasury yields also being closely watched with the Fed meeting on tap next week. Right now, the Dow is up about 0.2% or 87 points higher. S&P 500 is up only 1 point, now 2 points. NASDAQ is down 0.2% or 157 points. Russell 2000 is down about 0.2%. 10-year Treasury yield down 3 basis points at 4.66%. And oil down over 2.5%, trading at $89 a barrel. Intel reported stronger than expected second quarter results, where it recorded its fastest revenue growth rate for any quarter since 2011. Intel also offered optimistic guidance. However, after jumping in off-hours trading, the stock is now down by 2%. Meanwhile, American Express reported a revenue miss in the previous quarter, while its earnings came in above estimates. That stock down by 6%. Elsewhere, Oracle shares down 2% after the software company inked a 10-year agreement with the Pentagon worth almost $7 billion. Boston Beer up 2% after its second quarter revenue narrowly beat expectations, and Verizon up nearly 3% after it posted a mixed earnings report for the previous quarter. Its full-year guidance did, however, come in above expectations. I'm Tucker Silva, and that is Wall Street Watch.
Mike, we got this piece from Market Watch. It's titled, Why Fixing the Housing Crisis for Under 40s Could Trigger 10% Yields. So, okay.
Meaning, hold on, which, again, we kind of talk in this opaque terms. Treasury yields, 10-year Treasury yields at 10% probably means 30-year mortgage rates at 12, 15%, something like that?
Somewhere between 12 and 13, most likely.
Yeah, okay.
So, let's first go to part one of this. You never say never, but, I'm 99.99% certain that the U.S. economy and government can't survive 10% Treasury yields.
Yeah.
And by, the U.S. government can't survive, I don't mean that, what I mean by that is the U.S. government can't afford to pay 10% Treasury yields. The math just doesn't work. The whole thing breaks down. Why does this piece say that we need 10% Treasury yields in order to fix the housing crisis? And
so
one other thing, at one point, sorry, when does the housing crisis end? I feel like we've just been in a housing crisis for 20 years now, and if you just call it always a crisis, it's not one.
Right.
When is it just a house?
As I pointed out, more recently, I know that we need to take into factor a combination of different issues between incomes, home prices, mortgage rates. But I pointed out on the show earlier this week that compared to a decade ago, the price of a house compared to median incomes actually got a bit cheaper. And we've been pretty flatline. Now, again, mortgage rates being this high counteracts all of that effect. But I am with you that when we call it a crisis constantly, that's problematic. So for some reason, the author here, their solution to fixing the housing crisis...
To be fair, it's not the author. This was
this is the interview with the author of the paper.
By someone by the name of Russell Clark, who I've never heard of. Apparently, he runs a hedge fund over in the UK.
Yep.
Maybe he's good at it, maybe he's not. I haven't actually looked at anything that he's done.
So the argument for 10% rates is not a way of bringing down housing costs. In fact, it's a result of the solution, which he says, hey, to make housing affordable, we just need to dramatically increase incomes to the tune of 7% a year for the next decade, effectively doubling incomes over the next 10 years.
Tucker, can I get the car crash sound effect? Yep. And that's where it jumps the shark. That is completely, ridiculously insane to the point of being just not possible.
Again, quote, if you want to get housing back to some more reasonable levels, you need to have wages rising at about 7% a year. He doesn't define why you would need to see wages double over the next decade to bring housing to a more affordable level. That would make housing probably the cheapest that we've seen since the 1970s in the United States. And
Michael, there's
with
no
much lower
mechanism
interest
for that.
rates.
There's no mechanism for that. Furthermore, like when you look at the data actually, and I'll just use the Fed's wage growth tracker just because they have the data and it exists. So here's the deal. Like, wage growth doesn't just rise because we tell it to. We're not just like, it's not like you throw like yeast into, a bunch of flour and stuff and it's like, oh, it's rising. Like, no, wage growth rises because you have companies competing for talent and they have to pay more.
And not because of higher minimum wage laws, by the way.
No, like this. Look at 2022 just as the example. The Fed's Atlanta Fed's wage growth tracker reached 6.7% wage growth in July of 2022. Okay, the reason that it did that was because everyone was competing for labor. A bunch of people had gotten like laid off the year before, and everyone was like, "Oh no, we got to bring everyone back and more." And so it was insane. It was crazy. It was nuts. So here's the thing: when you get wages rising 7% a year, this Clark dude, who I'm calling dude, even though he's probably way more accomplished than me, he's probably like way better at his job. Like I'm calling him a dude because his point makes no sense here, and that drops your title from hedge fund manager to dude. And so basically what he's saying is, yeah, we want to get wages rising at 7% a year, but then you have to have the housing market be flat, so you need high interest rates to keep housing prices from rising. Well, if you raise interest rates that much, it slows the economy dramatically, which means wages aren't just going to grow at 7%. Like I don't know how you get these things coexisting.
Chuck, if I were made king for a day, like let's just, we like playing this hypothetical every once in a while.
Oh, yeah.
And
what would you do?
I was given the mandate, hey, you need to make housing more affordable by doing one of these two things.
We're restricting it to that, okay.
Either bringing down the cost of housing,
yeah,
or bringing up incomes. I'll take bringing down the cost of housing and putting in rules to do that any day of the week over trying to sort through how I'm going to shape the economy in a way that's going to consistently bring up wages over the next decade. Like if I'm king for the day, then, forget about all of your zoning regulations and all these things. I'm going to there's a pretty good formula for how you could go about making housing more affordable. The problem is it would piss everybody off, but if you're king for the day, then it doesn't matter. The conditions that you would need to create in order to consistently bring up incomes is just way more complicated.
Well, Mike, it ignores the laws of supply and demand. Okay? It's, hey, like, let's bring up incomes. Okay, but are we going to do anything to supply? No. Well, what do you think is going to happen? Well, that's why we need to raise interest rates that much. Well, then how are you going to get incomes up? Like, the whole thing breaks down because it's not logically coherent. So, yes, I come back to, hey, if we're actually serious about getting the cost of housing down, you build more housing. How do we know this works? The places that have done this, Austin, Texas, Minneapolis, Minnesota, look at what has happened to their rental costs, and you see it. It's like, oh, like this is how housing actually gets cheaper. Not just rentals. When you build more rentals, by the way, it means that people who might have previously chosen to buy, they decide to rent because it's cheaper, which then makes buying a house cheaper as well because there's less demand there. So,
and again, to be clear here, there are trade-offs. Guess what? If you build more housing and make housing more affordable, there's going to be more traffic. There's going to be less green space. There's going to be all of these things. And yes, you can build in a thoughtful way, but I just get so sick of this debate. I see it in my town's social media chats all the time. Like, oh, heaven forbid they're building a 30-unit apartment complex. We're never going to be able to drive through town. And like, yeah, sorry, you live in one of the most expensive areas in the country, close to one of the biggest cities in the country that happens to support some of the highest wages. So, yeah, there are these trade-offs, and I don't know what to tell you. I'm just done with this.
One cannot simultaneously complain about housing affordability but not allow more housing to be built. It is logically inconsistent and kind of just like not a nice move. It's you can't have your cake and eat it too.
What did the guy at the town hall say?
Marblehead.
It was something like it was like
Maybe we could stop being a bunch of pricks. How about that?
Yeah.
That was it.
Yeah.
Just such a good delivery.
It was very much the like.
No, he did it even better because he asked. So are we kind of just being a bunch of pricks?
It was very much the meme.
Well
of like,
done.
Wait a minute,
guy.
Are we the baddies? Is that us? And the answer is yes. Like we are. Like you can't simultaneously.
The collective we suck.
Yeah.
Yes, we can't complain about our property taxes and then say, but you can't build that. Mm-hmm. Like, no, you get to pick one. If you want to complain about your property taxes, fine. Like you can do that, but you can't say, don't build that. If you want to say don't build that, then you can't complain about your property taxes. You get to choose one. If you choose both, then yes, you are the baddie. Let's take a quick break. When we return, let's see. AI. It's still here, and we're going to talk about it.
The Financial Exchange is now available on your Alexa smart speaker. Ask to play the Financial Exchange and catch up on anything you might have missed. This is the Financial Exchange Radio Network.
The most important part of an inheritance isn't always the money. It's making sure your family is prepared for what comes next. Hi, this is Chuck Zodda from the Armstrong Advisory Group. Too often, important estate planning decisions are discovered only after a loved one has passed. Your plan may be very specific, but it can still fall short if your family doesn't understand your wishes. Our new guide, Talking to Your Kids About Inheritance, explains how thoughtful conversations today can help create greater understanding tomorrow. You'll learn when to have these discussions, how much information to share, and why clear expectations can help your family navigate the future with confidence. You can get your free guide today by calling 800-393-4001. That's 800-393-4001, or request it online by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Many people assume that if an asset is irrevocable, it's completely out of their hands. That's not necessarily the case. Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts, explains how these trusts can help protect certain assets from the cost of long-term care while still allowing you to maintain important rights and flexibility. The guide breaks down some of the common misunderstandings about irrevocable trusts and how they actually work. It explains why many families use these trusts as part of a broader plan to help preserve assets for future generations. Inside, you'll also find information about how these trusts work, what types of assets may be appropriate to transfer, and why the details matter when it comes to protecting what you've built. Get your free guide today. Call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or you can request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Our Senators Edward Markey and Elizabeth Warren and Representative Stephen Lynch are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Subscribe now to our YouTube page, where you'll find daily interviews and full shows of the Financial Exchange. We'll get you caught up on anything and everything you might have missed, right here on the Financial Exchange.
Mike, Intel reported earnings after the bell yesterday, and everyone's obviously interested in what's going on with semiconductor stocks. The earnings were fantastic, basically double what the market was expecting. Sales came in like 5 to 10% above for the next quarter. So the stock initially popped, I think, 12% after hours. Today, it ended up opening basically flat and now is trading off about 4.5% today. The semiconductor sector as a whole down 4% today. And so it's kind of continuing this theme of, hey, like semis, peaked about a month and a half ago and have just been seeing these huge daily swings now and are just kind of trading like poop, even when the overall earnings are pretty good.
Yeah, I mean, look, these were really phenomenal earnings, and I think, again, when you have phenomenal earnings paired with market or company sell-offs is an interesting thing to monitor. Obviously, there's some big execution questions with Intel. They have failed to execute on most anything for the last decade or so, and can they turn this moment into something lasting is the major question that everybody has.
Many people assume that if an asset is irrevocable, it's completely out of their hands. Well, that's not necessarily the case. Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts, explains how these trusts can help protect certain assets from the cost of long-term care while still allowing you to retain important rights and flexibility. The guide breaks down some of the common misunderstandings about irrevocable trusts and how they actually work. It explains why many families use these trusts as part of a broader plan to help preserve assets for future generations. Inside, you'll also find information about how these trusts work, what types of assets may be appropriate to transfer, and why the details matter when it comes to protecting what you've built. Get your free guide today by calling Cushing & Dolan at 866-848-5699. That's 866-848-5699, or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Mike, you got a fascinating piece in the Boston Globe. It's titled, Why Facebook Marketplace is the New Hotspot for Home-Cooked Food. Quote, you can't get that quality at restaurants. And basically what's going on is a bunch of people are making food in home kitchens and selling it on Facebook Marketplace. Now, I poked around, again, every state has different, laws as it relates to, is this allowed? What qualifies you to do this? What do you have to do? What makes this different from a restaurant? This came from the Boston Globe. So in Massachusetts, just as an example, you can set up what's called a residential kitchen. They established this law back in 2000, actually. So it's been on the books for almost closing in on 30 years now. And basically, you are allowed to sell under that definition non-potentially hazardous and shelf-stable foods, jams, jellies, butters, stuff like that.
Breads.
Cakes and cupcakes and breads are fine. But again, it's kind of spelled out what you can and can't do.
Gotta be honest, it does not look like the guy in the picture is preparing any of those types of things.
No, they're talking about people preparing soups and stews and things like that. And I'm of two minds on this. On one hand, I'm like, you know what? It's nice that someone's able to not have to go through a bunch of red tape in order to, do this. On the other hand, there's a reason why we have health inspectors and stuff like that, because you don't know exactly, what the kitchen your food is being made in looks like, and potentially can be very hazardous to public health depending on where it's being made, actually.
Yeah. I mean, see the massive lettuce issue that we are facing in this country right now, and then just I mean, that's happening with food inspections at one of the largest food suppliers in the world, and I don't know who would buy food on Facebook Marketplace. This terrifies me.
I end up getting.
Did
very
we learn
quickly
nothing
to,
from like our '90s upbringing of not taking candy from strangers and
I very much get to. You know what? Maybe we need to make it cheaper and easier to get through the regulatory hurdles for selling food.
But we should probably have them.
But they still need to exist because, again, I always like the phrase, don't take down a fence until you know why it was put up. And sometimes I think we forget about, what led us to put these in place. And it's like, oh, yeah, when you, cook food with, mouse droppings in there, you can end up with, rodent-borne illnesses that make you sick. Or, hey, if your kitchen happens to be, right next to, a pig that's rolling in mud, yeah, that can present, some bacterial problems and things like that. And you just don't know what the kitchen looks like if you're buying the stuff off Facebook Marketplace. You just don't.
And, I mean, there's some form of recourse if a restaurant gets you sick. Good luck finding the person on Facebook Marketplace again if they ever get you sick.
Well, I'm sure you can find them. Why wouldn't you be able to find them?
If I find out that I get a bunch of people sick, I'm closing my Facebook account. And
you still know who you bought from.
You know the house.
Right, you know the person.
No, all these people are saying, yeah, I meet up in a parking lot in a public space and nobody has my address for this.
Well, but don't you have to use your real name on Facebook Marketplace?
No.
You don't?
No.
You can just sell as, Jimmy,
whoever you
Butterball
want.
Turkey?
Correct. Yeah, this has all sorts of problems, guys.
Oh.
Don't do this.
Yeah, shut it down.
Don't do this.
I thought you had to use a real name on Facebook.
No.
I don't know. I haven't been on Facebook in 5 years now.
No. Yeah, this is not good. Don't do this.
Yeah, so I bought a seafood chowder from a guy called the Lobster Dude.
Right? That's kind of what it feels like.
Next thing I know, I'm all clammy. See what I did there? Yeah, I've had some bad seafood chowder in my day, I got to tell you. Let's take a quick break. Hour 2's coming up in a bit.
I was 24 when I had a stroke.
I was 35 when I suffered a heart attack.
I was 46.
I was 62.
It's a fact. Cardiovascular disease is the leading cause of death in women.
But we can fight against our #1 killer.
Talk to your doctor about your risk factors.
Know your family history.
Learn the warning signs and symptoms.
Together,
let's go red for women.
Visit goredforwomen.org to learn more.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. Heart Walk brings communities together to create health and hope for every heartbeat. Every walker who joins Heart Walk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local Heart Walk. Extraordinary starts with you. Join Heart Walk today. Find your local Heart Walk at heartwalk.org.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network. Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1 mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Many people assume that if an asset is irrevocable, it's completely out of their hands. That's not necessarily the case. Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts, explains how these trusts can help protect certain assets from the cost of long-term care while still allowing you to maintain important rights and flexibility. The guide breaks down some of the common misunderstandings about irrevocable trusts and how they actually work. It explains why many families use these trusts as part of a broader plan to help preserve assets for future generations. Inside, you'll also find information about how these trusts work, what types of assets may be appropriate to transfer, and why the details matter when it comes to protecting what you've built. Get your free guide today. Call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or you can request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins Heart Walk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local Heart Walk. Extraordinary starts with you. Find your local Heart Walk at heartwalk.org.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our new guide this month is titled Talking to Your Kids About Inheritance. Mike, what are some of the considerations for what needs to be brought up in conversations with your kids about their potential inheritance?
Well, first things first, I don't think it's always necessary that you do have the conversations, but just beware that if you don't, it can lead to confusion after the fact, especially if it's a non-equal distribution of assets. It can oftentimes lead to infighting. We've all seen that one before. And it can oftentimes lead to people making financial decisions because they're unaware of an inheritance that could be coming that might have been different had they been aware that someday, hey, this might be coming my way.
They're never easy conversations to have, but they're typically easier before there's a crisis as opposed to having to have them during or after the crisis.
Well, I mean, to put it plainly, at a certain age, you might not be able to explain the decisions, and that can lead to even tougher conversations. But what I would urge people is to, think about how to have those conversations, because like I said, on more than the number of occasions that I would like to see, I have seen inheritances tear families apart. Unfortunately, that's what money can do to people. And if you have those conversations up front and early on, it can at least go a long way to potentially prevent that.
The guide is titled Talking to Your Kids About Inheritance, and you can request it by calling 800-393-4001. You can also request it online at armstrongadvisory.com, and that phone number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
It's Friday here on the Financial Exchange. Chuck, Mike, Tucker, all with you, and stock's kind of in just choppy trading. The S&P just rallied about 20 points or so to be up 18 points, but basically had been flat most of the day. The Dow's up 161 points. The NASDAQ Composite's still down 91, so just kind of a mixed, slow day to finish the week. 10-year Treasury catching a bit of a bid today, so down 3.2 basis points to 4.671%. Dollar index, not really moving much on that. Dollar is off 0.06% to 101.23. You've got gold up $16 an ounce to $4,066. Crude oil, West Texas Intermediate, back down $2.65 a barrel to $89.54, reversing about a third of yesterday's gains. So some positive movement there. AAA national average for gas prices up another 1.5 cents overnight to $4.10. Diesel prices up 3 cents to $5.24. Based on where oil prices are now, we're probably still heading to around $4.20 to $4.25 nationally if we hold in this range. So still another 15 cents or so to move up over the next, probably by middle of next week, somewhere in that ballpark. And that is what we have moving in markets today. Peace and Bloomberg opinion. Americans are richer than ever. Why are they so angry? It's the phones.
Oh. It's all the technology in our pockets.
It's the phones. Like, I'm sorry. Here's the thing. Every time that we read about, American dissatisfaction, it can basically be summed up with 3 words. It's the phones. Now, it's not to say that, Americans have nothing to complain about, but my point is there's always been something to complain about. Yeah, we're complaining about this and that today. Okay, 100 years ago it was polio. 100 years before that it was, the British are attacking the White House. 100 years before that it was, my brother got killed exploring the frontier. 100 years before that it was, hey, Jimmy's got scurvy again. What do we do? There's always been something to complain about. So
we're just better at it. We're louder now. Is that your point?
No, my point is the internet sucks is my point. It's great. I love the internet, but too much internet is not good for you. You got to get outside and just do things. And by the way, if you want my evidence of this, look at the last month in America with the World Cup being here. Have you? I know that I'm a big soccer guy and everything, but you'd see the videos from people just hanging out in every city, and they're like, wow, this is great when people actually hang out in the public spaces and go to bars and restaurants together. And isn't this just amazing that like everyone is having such a good time and hey, no one's like hating each other, everyone's just chilling because we realize there's actually a lot that we have in common. I think everyone's so angry because the internet tells us we have to be angry.
Maybe, Chuck, but I'll point out that. So let's ignore the University of Michigan sentiment survey for a moment, since we've talked about how we think it's broken.
Sure.
We also have the OECD's consumer confidence index, which doesn't do the same thing, and it's pretty much telling us the same thing, that maybe not as drastic a story, but a pretty bad story about Americans' confidence on the economy. And something broke during COVID here. And again, maybe it's just how people
the phones.
react. Well, did you not have a phone in 2019, Chuck? Like,
people started spending a lot more time on their phones in 2020. I'm telling you, the internet has broke. Every study out there shows that if you get rid of people's phones, they're happier.
Yeah.
Because all you...
Stuff's still expensive, though, if I don't have a phone.
It's true, but that's not what's driving
That's part of it.
I don't think it is. I don't think it is. It's when you go on the internet, there is something bad somewhere happening, especially as it relates to the economy. There's some McDonald's that's charging $42 for a cheeseburger. There's some movie theater that makes you pay to fit both half of your butt on the seats. There is, like...
I'm with you, Tucker. I think that there is some combination here. I don't know that I can blame everything on people spending more time on phones.
Yeah,
it's
the pie, right?
I think
pie
that
chart.
the price change, the very rapid and severe price change over the last 5 years played a big role in all of this.
Mike, why is this happening across incomes then? Like, it's not just people with, like, low income saying this.
Because nobody,
you see the polling
even wealthy people don't like high prices.
Well, they got to get over it, man.
I'm with you,
I'm
but
sorry,
if you're asking me...
you got to stop complaining. Like, here's the thing. If you make, like, $250,000 plus in America, there are 6.9 billion people on the planet that would trade places with you.
True.
You got to get over it at a certain point.
Yeah. But also, I'm not sure that how we talk about things and all this stuff matters, because it doesn't seem to highly correlate on voting. It doesn't seem to highly correlate on spending. They make the case here that, hey, this is going to result in massive change of policy towards more populist measures that are not going to be good for anyone. I'm not sure I'm going to see that we're likely to see that happen. But maybe
you don't think we're going to see that happen? Mike, it's already happened.
Yeah, it's happened pretty dramatically. I guess the question is, does that continue? You know what?
It will.
Yeah, I guess it will. We just elected Mamdani. So that is the danger, folks, is by everyone being so unhappy, they look for what were once pretty out there ideas, and they might make us all poorer. They probably will make us all poorer if we really go that route.
Like, I got to tell you, it's, in my opinion, and again, I'm not saying that there are no problems now. Like, there are plenty of economic problems. Like,
by the way, for everybody, seeing me being biased against Mamdani, it's on the right too, right? Like, tariffs are one of those populist policies that I'm talking about. It's both sides.
We've got it everywhere, okay? Like, it's freaking everywhere. And look, it's not going to be solved by price controls and by, like, there is no right price for a house, just like there's no right price for groceries, just like there's no right price for gas. If you think there is, then tell me. Then, Tucker, what's the text line?
617-362-1385. I'm not Tucker, but it's right in front of me. So.
Text that and tell me what the right price for those goods are. A home, gas, and milk. Tell me what the right price is. Not like what the current. What's the right price? And if you can do that, okay, I'll buy it. But there is no right price for anything. So I got to be honest. It's the stuff that we're talking about when it comes to price controls. That leads to shortages. That leads to things that will make us more unhappy.
And I'm sorry to say it, tariffs will too.
100%.
Like, price controls on one side will do that. Rent control will do that. Higher tariffs, yeah, if you work in the industry that's being protected, then you will be a beneficiary. Everybody else loses on tariffs.
You want people to start actually responding positively on surveys? Then if you actually want policy that's going to do that, make it easier to do everything. And if you want people just to be happier in general, get them off the phones. Like, get them off the phones. Because your phone shows you one of two things. It shows you people with better lives than you, and then you feel like poop. And it shows you bad things happening in the world, and then you feel like poop. Like, it's what it is. Someplace, somewhere, there's someone who has more than you, and someplace, somewhere, there's something happening that's going to make you upset. And that's all you see on the phones, because that's what the algorithms show you. It's what they do. Let's take a quick break. When we come back, let's talk about something more uplifting here. We'll talk about this piece from the Wall Street Journal, talking about what we are seeing in terms of wages through Q1 right after this.
The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network. Many people assume that if an asset is irrevocable, it's completely out of their hands. That's not necessarily the case. Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts, explains how these trusts can help protect certain assets from the cost of long-term care while still allowing you to maintain important rights and flexibility. The guide breaks down some of the common misunderstandings about irrevocable trusts and how they actually work. It explains why many families use these trusts as part of a broader plan to help preserve assets for future generations. Inside, you'll also find information about how these trusts work, what types of assets may be appropriate to transfer, and why the details matter when it comes to protecting what you've built. Get your free guide today. Call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
The most important part of an inheritance isn't always the money. It's making sure your family is prepared for what comes next. Hi, this is Chuck Zodda from the Armstrong Advisory Group. Too often, important estate planning decisions are discovered only after a loved one has passed. Your plan may be very specific, but it can still fall short if your family doesn't understand your wishes. Our new guide, Talking to Your Kids About Inheritance, explains how thoughtful conversations today can help create greater understanding tomorrow. You'll learn when to have these discussions, how much information to share, and why clear expectations can help your family navigate the future with confidence. You can get your free guide today by calling 800-393-4001. That's 800-393-4001, or request it online by visiting ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Remember, you can watch the show live every day on our YouTube page. We've got market updates and breaking business news all morning long, plus a full archive of all our show's content. It's all there with the click of a button at youtube.com/The Financial Exchange Show.
All right, time for some Friday trivia here on the Financial Exchange. On this day in 1998, Saving Private Ryan hit theaters across the country despite being favored to win the Best Picture at the Academy Awards. Saving Private Ryan lost in a stunning upset. Yeah, I can't believe that. So, trivia question today, which movie beat Saving Private Ryan to win the 1999 Best Picture Oscar? Once again, which movie beat Saving Private Ryan to win the 1999 Best Picture Oscar? Be the fifth person today to text us at 617-362-1385 with the correct answer, along with the keyword trivia, and win a Financial Exchange Show t-shirt. Once again, the fifth correct response to text us to the number 617-362-1385 with the correct answer, along with the keyword trivia, will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Last segment, I asked, hey, if anyone knows like what the right price of certain items are, text us. Jeremy from the Vineyard texted us.
What's he got?
He thinks the right price of a single-family home is $325,000. The right price of a gallon of milk is $3.99, and the right price of regular gas is $2.25. So I've got good news for Jeremy. If Jeremy can invent a time travel machine and go back to 2019, he can have all those things. But and look, I don't think Jeremy actually like believes that like that should be the right price. Maybe he does. I don't know. But like it's just, you know, there is no right price for anything. It's just, hey, how do we make it so? Ultimately, what we're trying to do in order to have a higher standard of living is how do we make certain things that we need cheaper on a relative basis? How do we get more productive so that we can do more, produce more using the same inputs? The example that I love to give is, okay, let's say that you can catch one fish a day using your normal rod, and suddenly someone invents, a new lure or a new technique where now you can catch two fish a day. Well, now you've got an extra fish, same amount of time that you've used, and you can give that extra fish or sell it to someone else so that they are not as hungry as they used to be. That additional productivity has increased the overall standard of living. That's the kind of stuff that we want to see.
Yeah.
The price may go up or like the price may go up or down. Like it's again, think of it this way. Like if you look at cars today, okay, they are way more expensive than they used to be. They also do a lot more than they used to. If you wanted a car that still had like windows that, no power windows, no power seats, no air conditioning, just AM, FM radio, like if you want, no Bluetooth, no beeping when you get too close to the car. If you wanted a car that just did that, you could probably have it for $10,000.
Yeah, there's a company that's trying to make them right now.
They are. What's it called?
I forget the truck that's just stripped down to
Slate,
nothing. Slate,
right?
Yeah.
Slate. Yeah, those are launching in the next 6 to 12 months, I think.
Allegedly.
Yeah, we'll see.
But again, if you're hoping for prices to come down on a actual basis, one, they almost never do. Two, if they do, you will not like every other feature of the economy. You won't have a job. There will be a lot of people without jobs. That's when prices come down, is when the economy sucks. So you want prices to come down on a relative basis compared to your income, not on a real basis.
Now, we also got a second text from a listener as well.
Oh, yeah?
Quote, Trying not to be mean, but what is Mike trying to do? Anyone that is his friend should be honest with him. Do away with that silky mustache that he munches on and that haircut.
What?
He looks so much older with these changes. He was a good-looking guy before. Love to listen to the show on the radio and watch on YouTube whenever possible.
So we have not publicly or addressed this on air.
No.
It's just like Mike has been in front of our cameras.
Well, there's
with
been
a
something
mustache.
growing on Mike's
Gotta
face.
tell you, I've been getting nothing but compliments.
It doesn't seem like it in this case.
I like it.
I'm joking. I've been getting a lot of insults, which is kind of my favorite part of this because I love a good, well-equipped insult. So.
I think it's fantastic, personally.
Yeah.
I mean, the fact that you're doing
I
so
would've
much
told
to
you if it looks
encourage
like crap.
biodiversity is just great.
Mm-hmm.
And it's good for the eventual butterfly population that you've got that thing there.
The most offensive thing in that text, I think at least if I was in Mike's shoes, this is the haircut.
Yeah, didn't change my hair at all.
Haircut for since I've worked here, since I started.
You are way uglier now, Mike, is what we're trying to get across. The most creative one so far was a coworker who asked me if I was going to go and tie a woman to the train tracks like Snidely Whiplash, which I liked. That was pretty solid.
Like that.
That is pretty good. Let's see. What do we want to cover now? Here we go. Piece from the Wall Street Journal. Paycheck boost gives low-income workers a breather. Yes, this is actually really interesting. So for the last couple of years, we've been seeing slowing wage growth, in particular amongst those in the bottom 25% of incomes. In fact, for Q1 of this year, 25th percentile incomes increased at the fastest rate out of any quartile in the United States.
Which there's a lot of different reasons that this is a really good metric to have. An economy where the lowest decile or quartile is seeing fast income growth means a few things. One, generally a sign of a tight labor market, which you like to see. Two, if you're hoping for economic growth led by a consumer, if there's one consumer group that spends a lot more than it saves, it is anyone in that bottom half. And so seeing that move forward is not only an improvement for some of the poorest Americans, but it is also an indicator that, hey, labor market's tight and that money's going to be spent. So really a good metric. We saw this the last time the labor market was really tight, right? It was 2022, 2023 time frame where those incomes were rising pretty dramatically. This isn't quite on the same scale, but it does match up with the data that we've been seeing from job creation and a relatively low turnover labor market. So I don't know. Does any of this hint to you as anything but good news? Because I don't see any bad mirrors here.
And it matches data. We covered a couple weeks ago that PNC Bank, they were showing the fastest spending growth coming from lower quartile, or maybe it was. They might have had it might have been the lower third of the income spectrum, but they said, look, it's not like that group is spending down their balances. We're seeing more money coming into their bank accounts as well, and so we think this is sustainable. So it's not just this
the rich.
labor
It's
department.
not just the rich baby boomers that were the whole narrative for the last couple of years.
Well, and my point is, some people might say, well, the labor department data, who knows how accurate it is. It's being confirmed by other sources in the private sector that are saying, yeah, we're seeing the same thing too. So I do like that we're seeing that. We still need more of it, and it's something that obviously takes some time to really work its way into the system. But I do think it's something that's happening, and I do think it's good to see because you want to see broader-based income and spending growth, not just hey, the top 5% are spending and seeing their incomes grow. That doesn't do anything for the other 95% of people.
Correct.
Let's take a quick break here. When we return, we've got the trivia answer, and we've got Wall Street Watch.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Our Senators Edward Markey and Elizabeth Warren and Representative James McGovern are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about how Medicaid irrevocable trusts operate. Now, Todd, it takes 5 years to protect your assets from the cost of long-term care. If you aren't sure you or your spouse will make the 5 years before going into a nursing home, should you even bother to do your estate planning?
The answer is absolutely yes, you should bother. And here's why, folks. There's people who maybe don't even start their planning until they're 80. It doesn't mean just because you're 80, you don't try, you don't plan, right? 85, you plan. You don't know whether you're going to get sick or not get sick. But by the same token, when you're 65 and you're doing your planning, you also might not make it past the 5 years. So just because you might not make it past the 5 years is not a reason to get this clock started. For example, lots of times when we put assets in the trust, we leave lots of assets outside the trust, especially IRA assets. So let's say you made it 3 years, but you had $200,000 in an IRA outside the trust. If I got $1 million worth of assets in the trust, I'm happy to spend $200,000 of my IRA to get past the remaining 2 years to get me protected from the nursing home with the $1 million that went in there. So getting the clock started is always better than not having the clock started.
Cushing & Dolan have been helping families like yours for more than 30 years, and find out if they can help yours too. Request this brand new guide called Unlocking the Power of Medicaid Irrevocable Trust. Call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Some more choppy trading to close out the week with a modest rally by midday as Wall Street awaits more developments out of the Middle East. Right now, the Dow is up 0.2% or 353 points higher. S&P 500 up over 0.5% or 38 points higher. NASDAQ is now flat after seeing a modest sell-off in earlier trading. Russell 2000 is up about 1/3%. 10-year Treasury yield down 4 basis points at 4.65%, and oil down 4%, trading at $88 a barrel. Intel reported stronger than expected second quarter results, where it recorded its fastest revenue growth rate for any quarter since 2011. Intel also offered an optimistic guidance. The stock is down by 3% after rallying in off-hours trading. Meanwhile, American Express reported a revenue miss in the previous quarter, while its earnings came in above estimates. Amex is down by 5%. Elsewhere, Oracle down by 1% after the software company inked a 10-year agreement with the Pentagon. Verizon up by 3% after it posted a mixed earnings report for the previous quarter. Its full-year guidance did come in above expectations. In breaking sports news as of 2 minutes ago, where LeBron James has agreed with the Philadelphia 76ers on a 2-year, $8 million deal. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question: which movie beat Saving Private Ryan to win the 1999 Best Picture Oscar? That would be Shakespeare in Love. Ed from Norfolk, Mass. is our winner today, taking on the Financial Exchange Show t-shirt. Congrats to Ed. We play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
I got to say, LeBron looks weird in a Sixers jersey.
I had a feeling it was going to go there.
He's been dropping some hints the last week or so.
That's a interesting mix in Philly now.
Yeah, it's
a lot of
mouths
big
to
personalities.
Feed. A lot of mouths to feed.
Yep.
So yeah, it'll be fun. I'll say that. Let's talk about this piece from somewhere. It's where's USA Today. Didn't recognize the logo for a minute. Many Americans retire earlier than planned. They have regrets. What regrets?
Well, mainly about having their budgets cramped and a lot of expenses early in retirement. I think this piece is important to acknowledge that most of the time when people retire early, it's not by choice.
Agreed.
Yeah, like I know we talk a lot about, hey, the ability to retire early and preparing so that maybe you can do it, but I would be willing to bet that 9 times out of 10 it comes because of layoffs, illness, things along those lines that make it so that you can't quite make it all the way to age 67. It's a very small percentage who are able to say, yeah, I prepared myself financially and I'm ready to go at 62, or I work for one of those employers who deems full retirement age to be as early as 62. Maybe I work as I see that most commonly, obviously, with state and federal workers or workers in particularly taxing jobs, linemen for utility companies, things like that. The vast majority of us don't get to make that choice. And so the regret, I think, for most of them is needing to scramble and stress over how am I going to support my family still while missing out on maybe 3 years of additional income, 3 years of savings. And remember, when you retire earlier than anticipated, right? It is not merely the fact that I can't save an extra 3 years. It's that I need to spend from my savings for an extra 3 years. It is a compound effect there. And I mean, Chuck, we always talk about it, right? If you plan on retiring before your full retirement age, 10% of your income going into savings, in all likelihood, ain't going to cut it. Right?
Yeah.
Like, I know that's a good standard and we preach that, but if your plan is to retire at 55 or 60, and have what very well could be a 30 to 40 year retirement in that case, it's going to require a lot more than just standard protocol. So what to think about if your goal is to retire before age 67, or maybe just before age 65 even, because it does get a lot easier at 65 to pull off a retirement for most people. a few crucial things you got to think through. One, when am I going to collect my Social Security? How is that going to affect me? Is retirement going to be full retirement, or am I just trying to get out of this really trying job that I've been in for years? Am I going to work part-time in retirement? Because that certainly changes the formula on Social Security too. The most difficult one, though, Chuck, we face this all the time. Where is my health insurance going to come from? I'm at a critical age here where I need good health insurance coverage. I cannot risk going to the hospital and facing a $20,000 bill. So where's it going to come from, and how much is that going to cost me? Because I can tell you, you'll be able to get the insurance, but it sure is not going to be cheap unless you have really done some good planning here. If your plan is to work till 67 years old, like I said, it's not a surefire thing, but if you're able to save 10% of your income for the majority of your working career, not accumulate too much debt, own your home and are on a good payoff schedule, a lot of the time that's going to come pretty close to getting the job done. If your goal is to pull away early, if your goal is to get retired at 62 or 55, one of these really ambitious goals, you need to put in the work probably yesterday. If you'd like to work with somebody who helps their clients guide through that process and set a realistic target, give the folks at Armstrong a call. We can help you map it out, think about the things that you might not have thought about, and whether you need somebody permanently to help you map that out or, is just a one-time consultation. We're here to help. The number is 800-393-4001. You can go to armstrongadvisory.com for lots more information, but that phone number to talk to a real live human being, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Let's see. What do we want to cover here now? Let's talk a little bit about this piece on Tesla from Barron's. It says Musk is losing his magic and Tesla is paying the price. I'm just not sure that those facts are in evidence, and it's not to say that. Again, I'm not like some huge big giant long-term believer in Tesla the company, but this is a company that on an annual basis typically sees multiple 15 to 30% drawdowns. I'm going back and looking at it right now just because I was curious and wanted to kind of see what the last call it 5 years had looked at for them. And if you pull up the 5-year chart and take a look at what kinds of drawdowns have they seen. In 2022, they had, it's one drawdown of 30%, two drawdowns of 30%, three 30% drawdowns in a single year. In 2023, they had two different 15% drawdowns. They had another 30% drawdown in 24. In 25, they had a north of 30% drawdown. So.
And by the way, the stock over the last 5 years is still up a good 45%.
Yes. So I think the point that I will make is, look, if you're someone who's, longing for the Tesla of 2020 when it went from $20 a share to 300, those days are over. It's not going to go 15x in a single year because it's not going to go to $18 trillion in a single year.
And I'm not sure any of Elon Musk's other companies can either, right? SpaceX IPO'd at a time that was very different than when Tesla IPO'd.
Yes. So I think, if you're expecting Tesla to do what it did back in 2020, it's not going to. Those days are over. Is it, a stock that still has, crazy, movements that can go both poorly and well for investors? Yeah. But it's just a highly volatile stock that when you look at the last 5 years, that volatility gets you some growth that's happened. But that's what it is now. And so I don't think that Elon has lost his mojo any more than he did in 2022 or 23 or 4 or 5. It's just, guys, you can only have your stock go 15x so many times before it gets to a size where that's just not possible anymore. And it's kind of there. Like it's just not that kind of company anymore, given the size and scale that they now operate at. But just because they had like a bad quarter, I'm not going to poo-poo the thing. You know, like,
right.
What if they have a great quarter and it goes up 15%? Did he get it back? Like, no, like it's just how the stock trades. Quick break here. We've got Stack Roulette coming up next.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
The most important part of an inheritance isn't always the money. It's making sure your family is prepared for what comes next. Hi, this is Chuck Zodda from the Armstrong Advisory Group. Too often, important estate planning decisions are discovered only after a loved one has passed. Your plan may be very specific, but it can still fall short if your family doesn't understand your wishes. Our new guide, Talking to Your Kids About Inheritance, explains how thoughtful conversations today can help create greater understanding tomorrow. You'll learn when to have these discussions, how much information to share, and why clear expectations can help your family navigate the future with confidence. You can get your free guide today by calling 800-393-4001. That's 800-393-4001, or request it online by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Protecting your assets doesn't always mean giving up control. Get Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts. Learn how to protect your assets while maintaining planning flexibility. Get your free guide today by calling 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. For veterans, every day is a commitment to service. This Veterans Day weekend, be part of something meaningful at the DAV 5K Boston. Join the thousands of runners and walkers at Fort Independence on Castle Island for a day of community, remembrance, and gratitude. Proceeds help fund the programs and services provided by the Disabled American Veterans Department of Massachusetts. To register or make a donation, please visit dav5k.boston. That's dav5k.boston.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Follow the Financial Exchange Show on Instagram and see what's driving the conversation about Wall Street and economic trends. This is the Financial Exchange Radio Network.
Ladies and gentlemen, the weekend.
The Financial Exchange is incredibly proud to be a partner of the Disabled American Veterans Department of Massachusetts. Hundreds of runners have already registered for this year's DAV 5K, and the event is on pace to sell out in record time. So head to dav5k.boston for all the information about how you can participate this November or make a donation to support our great American heroes. Your gifts help fund free rides to medical appointments for veterans and the nation's first DAV-led housing initiative, providing homes for single veterans and veteran families. Go to dav5k.boston and make your donation today. That's dav5k.boston.
Mike, what do you got for Stack Roulette?
I want to talk airlines for a moment here.
Fun.
Following the demise and liquidation of Spirit Airlines, we raised the question at the time, what might this mean for the next airline in the most precarious spot, which would probably be JetBlue.
Jet who?
Yeah, those guys. They issued some debt back in 2024. It was a 7-year bond issuance paying nearly 10% on the coupon. Through 2025, it was trading around par, that $100 level. Since June of this year, it's taken a bit of a walloping. It's now down below $85 on these bonds. The yield to maturity now is up in the 12 to 13% range. The stock's actually done all right this year, but they do report earnings next week. And again, the price on these bonds has followed pretty closely with what's going on in the Middle East and jet fuel prices, but it continues to raise questions about, hey, in these very capitally intensive businesses, airlines in particular, with more and more competition being forced out, where does it leave JetBlue and a few others compared to the big giants now of American, United, Delta, and Southwest? And the answer for the time being has been not in a great place.
Yeah, I think it's pretty clear. And again, the answer can't be, hey, we don't want to let you merge because you're going to be too big. Well, you already allowed it for all these other guys.
Yeah, I mean,
it's not a level playing field if they can't merge.
Yeah, so JetBlue will probably continue to point at that, and they should. I think, bit of a mistake. Spirit Airlines warned, hey, we're going to go bankrupt if you don't let us merge. Merger was blocked. Lo and behold, they went bankrupt and sold all their jets to the big players.
Yeah. Let's see. What do I want to talk about? Mike, when's the last time you've been to Vegas?
2021, maybe?
You a big buffet fan?
No.
No, not a big buffet fan.
No.
How come?
Nothing against the buffet. Just
buffet,
not the highlight of my day.
Buffet in general, or the Vegas buffet that you're not a fan of, Michael?
Yeah, we're talking about Vegas.
Yeah, I think generally, but even in Vegas, I guess I've just never been to it. I know that Vegas is famous for their buffets, and I haven't been to one, so I can't say that I have an immense amount of experience with this.
There's only 4 buffets left in Vegas now.
Left?
That's it?
There's only 4 left.
What?
In March 2020, there were 12. There's 4 now. They keep dwindling. And the big thing is, number one, like the prices have moved way up. And number 2, look, buffets, like, naturally, like, they're not, even with higher prices, they're not really, profit centers when you have a bunch of wealthy people that are now traveling to Vegas. And this is the thing, like, the character of Vegas has changed in that it used to be, hey, you can get a room for, like, $50 for the night, and then you're going to lose all your money playing, craps. Now, the hotels are saying, hey, there's all these wealthier people coming. We can charge more for the rooms and, like, nicen up the place. And so it's a very different vibe than even 10 years ago. And if you went back in like the early 2000s, late 90s, it's borderline unrecognizable.
I'll also say, compared to a couple decades ago, the options for what to do have expanded pretty dramatically. Not that there weren't shows 2 decades ago, but you didn't hear about people bringing their families to Vegas 2 decades ago.
I'm seeing the prices for buffets are $60 to $80 in that range.
I'm not surprised.
Yeah.
I was kind of surprised by that.
Yeah.
it's not, the $20 all-you-can-eat buffet anymore.
Yeah, that's kind of what I was...
No, it's moved in a very different direction.
Yeah.
And, look, you can yell at the clouds all you want. This is what it is now. And honestly, it's no different from what you see in a lot of city. Like, as an example, down by the TD Garden now. It's a bunch of, places that have gotten all spruced up and everything like that. The only place that's really left from the old era at this point is Sullivan's Tap. Everything else is gone.
Yeah.
Everything, the penalty box is gone. I'm trying to think of, the stuff that used to be down there.
The Hurricanes has been there a while, no? The Harp?
I mean, I don't qualify those as, the same.
Yeah.
It used to be,
Halftime
pretty
pizza.
dingy and run down. Halftime's still there, but even that's under different ownership, I think.
Oh, is it?
Yeah.
No.
So it's... the vibes in all these places change. And
well, look, Chuck, I mean, I think attending any of these things has gotten much more expensive.
Well,
and
it's
therefore
scarcity.
is
There's
attracting
only
a
one
different
Vegas.
clientele.
There's only one Vegas. And so that's the thing is, hey, if you have more people with more money and Vegas is still, there's still only one of them. Okay, yeah, of course you're going to be able to charge more. It's no different from how people complain about sports, tickets and concert tickets and stuff like that.
Mm-hmm.
It's the same thing, unfortunately.
Well, Vegas was pretty attractive because it was pretty affordable back in the day.
Well, yeah, they wanted to get you there cheap and then, completely rinse you. That's how it was. It was, get as many people as we can here. And now it's, they'll come anyways, even if they have to pay more.
And we'll still rinse you.
Yeah, and then we'll rinse you. It's great. There's nothing like it on earth. It's wonderful. Taking a look at markets, we've got the S&P stretching its legs a bit, now up $42 a share, not a share, 42 points. You've got crude oil now off about 4.25% on rumors that the Pakistanis are trying to move a new peace deal forward. We'll see. Again, I don't know if something good's going to come out of it or if it's just more noise. But we'll see what ends up happening there. But kind of a reversal of yesterday's moves taking place here today. And, we'll see what happens over the weekend. We are going to take just a quick break for the whole weekend. But I hope everyone listening, hope you have a great weekend. And we're going to be back on Monday. And it's a Fed week and a monster week for earnings. So this week, you're forgiven if you tuned out a little bit. Next week,
no forgiveness.
Yes, zero forgiveness, all business, starting Monday. We'll see you then.